Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders, and our website is www.stochastic-magdi.com. For Elliott Wave Trading, www.24elliottwaves.com. The title of this video is How to Count Elliott Waves Guidelines 2. All right, in the first part of this series of video, we were talking about the first guidelines: consolidation, breakout, retest, turnaround was the first guidelines. For these second guidelines, we are looking for what? A cycle point. As I explained to you in the first video, the most important thing when we are counting Elliott wave is to be able to identify correctly, accurately, the first Elliott wave. You want to know, you want to get that right. It's the foundation of your wave count. You must be able to identify the first Elliott wave correctly. This is the purpose of this series of video. That's why I'm sharing with you what you need to look for if you want to start counting wave. Because if you do not recognize the first wave and you don't even know about the wave principle, the rules, that the second wave should not cancel the first wave, that the fourth wave should not overlap the first wave, you are likely to get into trouble. But the most important thing is to recognize the first wave. And once you see it, you are on the right path to be able to identify the second wave, followed by the third wave, and to catch the longest wave, which is the third wave itself. One of the guidelines that we use, okay, is the cycle point. What do I mean by cycle point? Price goes down from A all the way here, and then for one reason, the price return back to the starting point. This orange spot here, this is what we call a cycle point. When the price turn around 180 degree, all right, that's a cycle point. You will see that also sometime like this, where the price will go up, boom, 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 up, and then it will come back down and to the cycle point. Now, for day traders and TSTW24 traders, I want you to look for this scenario very often. Those who are trading for us on the 4-hour chart, you will see very often an Elliott wave cycle. An Elliott wave cycle will begin from a cycle point. So look for it on the 4-hour chart. You will see that. Just draw the line. Don't get too excited about it. Practice with it first. All right. Doesn't mean that definitely yes, it's going to work always. All right. You will apply the trading drill. All right. So for the 4-hour chart, break it down, 50-minute chart, and then lower time frame for entry point. Trading drill. Pay attention to the economy news. All right, the economy news can change the dynamics of the market. The fundamental can change the dynamics of the market. So don't use the technical alone. But the point I'm making, very often we see the first wave starting from a cycle point, right? Like this, breakout. You see here, a cycle point. Price did this round, which means the price returned to the equilibrium level. Some people saw it here, all right? These were sellers, okay? Understand what is happening here. So sellers control the market, price hit a support level, they book through control. So they bring it back to the point where the bear was selling. But this time, the bear couldn't bring it back down. So it's not consolidating, but now the bull continue to push it up. So which means the bulls have won. They go above it. It's a psychological price level to a certain degree. So here you will see very often the bull will push it out, declaring their strength or their superiority, which will form the first Elliott wave. This is guidelines number 2 if you want to count Elliott wave like a pro. I got 1 minute left. The opposite is also true, where the price will go up and then return back to the cycle point. In this case, you will see that so the bull were dominating the market, and then for one reason the price hit a resistance. Bear push it back down to a support level, but the bull could not bring it back up again. But instead, we see a breakdown, all right, steadily. The wave count is dynamic. It's not because you see the first wave that you will definitely see the third wave. Everything can become messy. If the second wave counts on the first wave, we might restart counting the wave, or the price may go back above the cycle point. So understand that, okay? Very, very important. So this is one step to know where one is able to identify the first wave. Because if one is not able to identify the first wave, one will have a hard time to count the Elliott wave. As always, adhere to the Elliott wave rules and principle and do not violate the market pattern combine the technical analysis and the fundamental. This strategy you will see also on a daily chart, weekly chart, monthly chart, even a yearly chart, when you see a cycle starting from a cycle point. If you look quickly on this chart for Cisco, the price went up. You see here there was this very strong bullish move all the way up here. We bring it back to the starting point right here. This is a cycle point. But there is a combination of, if you look carefully, there was a cycle from here all the way up here, and then there's a correction. So we have a cycle point, if you start counting it here, all the way back to the starting point. But there was a bigger cycle for Elliott wave, talking about, guideline 3, which I'm going to discuss with you very shortly. Thank you for watching, and we will speak to you very soon. If you like this video, please share it on Google+, Facebook, and Twitter, and give us the thumbs up. If you dislike it, put a comment below so we may improve our recordings. Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders talking about how to count Elliott wave guidelines 2. See you in guideline 3.